And thank you to everyone. Good morning. I'm Patrick DeVilbiss. I'm the head of product for CGI's Trade 360. And I have the joy today of talking about a topic that perhaps not dear to everyone's heart is certainly near to everyone, red flags as it relates to traditional trade and supply chain finance. Oop, is that a problem? Can everyone hear me? Okay, good. So there's a reality that on the ground, all of you in this room are the front line as it relates back to combating fraud, trade-based money laundering, and other illicit activities related to ongoing trade in the globe. And there's a need to blend both just your everyday practices with the technologies that are out there and available to you all on a day-to-day basis to combat what the criminals are doing. And I think we've seen that the capabilities are only augmented by the bad actors in the market, only becoming stronger on an ongoing basis. So there's a need to review using those technologies, how you implement them in order to combat trade-based money laundering and other illicit activities. So I'm joined by a panel that I think is well suited, both from a banking perspective as well as from a technology perspective, to speak to some of the challenges we have today, but not only that, but some of the solutions we're seeing from a market standard. So starting from my left, Mansour Davarian, who's Managing Director and Co-Head of Transaction Banking Solutions for Lloyds. Mariya George, who is a co-founder and CEO for Cleareye Technologies. And then Nigel Hook at the end of our panelist, who is a founder and CEO of Tradesun. And thank you to the two of you, because your titles are shorter, which is always a little bit easier to remember. Sometimes they get quite lengthy. So we want to dive into things. We are going to save a little bit of time at the end for Q&A, so feel free to leverage the Q&A panel, and we'll hopefully get 10 minutes to wrap up. But I want to get into some of the questions. And the first one, Mansour, I'm going to turn to you on this first. How have red flags in trade and supply chain kind of evolved over the last few years, and what's really driven some of that change out there?
Yeah, it's a really interesting question. So I suppose just taking a step back. So I head our transaction banking solutions business, and prior to that headed our trade and working capital business. Sort of leaning on some of the things that were said earlier this morning by Ather from Wells, I think it's a very interesting dynamic in the market at the moment, whereby Lloyds as an organization is looking to expand quite heavily within the trade finance space and actually have invested quite heavily into this space accordingly. And when I think about the way in which we've done that, we have decided to buy versus build, and we've decided to partner. So for example, we partner on the open account side, and we also partner on the doc trade review side, so working very closely with Cleareye. So in terms of the way we see red flags and sort of the change in the market that we're seeing today, I mean, there's two types for me. There's the complex and there's the non-complex. In respect to the non-complex, these are sort of urgent requests from clients that may be new to bank, that may be new to us as a business, that are seeking to effectively defraud us and get access to funding through our business and through our operational teams. Now, this is really where it's important that the frontline teams actually understand the client base and actually also understand the transactions at play. But from a sort of secondary standpoint, we are seeing a lot more complex situations arise, specifically around the shipments of goods, the adjustments of bills of lading, and then also as we think about trade tariffs, the movement of goods to different jurisdictions to benefit from better tariffs. That then impacts, obviously, under and over invoicing. And if we think more broadly around doc trade, it's easy to pick that up in doc trade. It's easier to identify that in doc trade. As we move to open account and supply chain finance, it becomes a lot more challenging, and that's where sort of due diligence is hugely important, and we'll touch on later. So what I would say is the use of intermediaries. We're seeing a lot more use of intermediaries in the market. And then with the new tariff situation, there seems to be a question from our side as to how we manage that situation on a go-forward basis.
Yeah, that's great. Mariya, if you want to add your thoughts there.
Absolutely. So to add on to what Mansour you were saying, right? So when we look at it from a product point of view, a couple of things that we focus on is also, like you said, we have to look for inconsistencies between documents. That's the traditional way of doing things. What we have also seeing a lot is, you touched upon duplicate invoicing, under invoicing, over invoicing, multiple invoicing, phantom shipments. All of those is happening. Now, one thing that, again, when we explore what happens next is something that we are coming across. We cannot just limit ourselves to looking at a transaction level, red flags at a transaction level. So there is two other things that I want to highlight, add on to what you said. One is the concept of knowing your customer's customer. So it is not just a transaction, you're looking at the entire network of your customers to figure out, is there an opportunity, is there a potential for a red flag in that scenario? The second item I want to highlight is what we can think of as a network analysis. So what I mean by that is, you look at all the parties in a specific transaction, figure out how those parties are interconnected, and then explore if there is a potential for a collusion. So these are some of the additional things that we look at when we talk about red flags as it happens now and in the changing scenarios of tariffs, for example. You touched upon shipment of goods. Yeah. So these things become even more prevailing in these changing situations.
Thanks, Mariya. And Nigel, if you want to pick up on that.
Thank you, Patrick. Yeah, I'd love to share my perspective with everyone. It's a little bit different in that there's two factors which affect the relevancy of what I'm going to say. One is, the last few decades, I've lived in San Diego. San Diego is the biggest cross-border in the world. Over 40 million people cross that border every day. Over 70 million vehicles, cars, trucks, pass across that border. And California is number one on the list, which you don't want to be number one on. It's number one on the list for highest violations of human trafficking. And so that's the one side. The other side of where I come from, where I spend a lot of my time, is spend a lot of time with the FBI. Never worked for the FBI, but I work with them. I'm currently a director of FBI's Citizens Academy. And two of the things I focus on, one of them is human trafficking, based out of the San Diego office for the FBI, the field office there. And when you see the impact of human trafficking, that's what's driving the red flags, the reason for the red flags. One of the nonprofits we work with, called the BSCC, it's a bilateral safety corridor coalition, unites 80 agencies around the country, HQ'd in San Diego, to stop human trafficking and to help the victims. And one of the ways you do that, the authorities look at that, right, and say, we can apprehend these people if we can catch them. But one of the best ways, right, is what we do here with implementing red flags to stop trade-based money laundering. Because if you can stop the flow of money, essentially, it's a shot through the heart to these organized crimes, and it's going to impact their ability to do these horrendous predicate crimes to TBML, one of them being human trafficking. So the driver, I feel, in the red flags is the root cause of a problem in our society.
That's interesting. So Nigel, I want to stick with you for a minute. Can we talk about what banks are doing today and maybe where you think there are the largest gaps that exist in terms of detecting and responding to potential TBML? Mansour, we'll leave you out of this. We want an unbiased point of view. No offense to the banks. But Nigel, if you want to take that first.
Thank you, Patrick. Yeah. So what Todd said earlier was about the collaborations which are increasing around the world to share data. He talked about the UK and the Netherlands. And there's been efforts in the UAE and the Monetary Authority of Singapore to unite data around this cause, right? But what's immediate here in the US is the fact that of all the suspicious activity reports that are filed, and I'm sure, Mariya, your product does this for banks like ours does, only out of those 43 million SARs filed in 2023, only 4% got any attention from federal law enforcement. And only 0.3% led to any arrests, and 0.01% led to any convictions. And so what I'm seeing is that these suspicious activity reports that get sent into FinCEN, Financial Crimes Enforcement Network, nothing's coming back. And we're interested to see maybe where BAFT can help us, and maybe I should talk to Craig about this. And by the way, if any banks here do get any feedback from SARs that are filed, please let me know. I've got a stack of hats, just one of them here. TBML.com is a website you can find out a lot about this, TBML.com. And I've got a stack of hats to go out. So I'd love to see if any of the banks have actually got response on these SARs that have been filed. Because only having 0.1% lead to a conviction, I think all the hard work we're doing with technology and the process is not been effectively used.
And the flip side of that is that, but to not file one of those SARs, to have a finding against you comes with massive consequences,
exactly.
right? Which we all know about, unfortunately. Mariya, do you want to pick up on that as well? What do you see that the banks, how they're responding and what they're implementing, maybe where some of those gaps are? And
Oh, sure. Thanks, Patrick. So in my role, we have the opportunity to work with some of the global banks, banks in North America, Europe, Middle East, APAC. So what we are seeing, the answer is very different depending on who you ask. And banks are at very different levels of maturity. But one thing, again, it's not same across all the banks. One of the first things that came to my mind is the insufficient training provided to the people that are supposed to be the staff who is doing the AML checks or the TBML checks. And some of the banks are still doing it the conservative way. But the criminals have gone past, they're at a different level of maturity. They've figured out how to get things done in a much more nuanced way. So the training levels have to change at the banks. Again, it's not generic to all the banks, but some of the banks are way mature than this. But that's one of the first problems if you think about it. The second thing that I can think about is how the banks are using their AML systems today. So what I mean by that is many of the banks have figured out a way. They have technology in place. They're using some kind of an AML system to check for TBML flags, et cetera, red flags, TBML checks and red flags. However, if you're using that system in silo, the chances of you really getting the results that you need versus if that system is talking to external systems, pulling the data from systems is significantly higher. So if you're just doing things in a silo, maybe that's why the results are not coming back. So that's one. And the third one is open account. Because of the nature of open accounts, there's only so much you can do. And banks are trying to figure out what do we do in the open account space. That's just the way it is set up. And the last thing I can say is again adoption of technology, because most of the banks we talk to today agree that you have to bring in technology, a product to do this, have products to help with this. However, there is some kind of delay which is preventing them from adopting it fast. But I think at this point, moving ahead faster is crucial, and those are the 4 gaps I can think of.
No, that's fair. Yeah, and moving quick is important. I want to pick up on something that you referenced there, Mariya, which is the open account side of things, right? So Mansour, I'll direct this towards you first. From your perspective, is there a difference in terms of what we see and what we should be concerned about in the red flag space as it relates to open account versus Doc LC's traditional trade products?
In my view, it's very different. From the open account side, if you think about supply chain finance, for example, you're very much reliant on a buyer, and your initial due diligence or upfront due diligence on the suppliers are typically one-off rather than consistent, regular, and so forth. And I think that when we think about the counterparties we deal with, be it on the open account side or on the doc trade side, if you think about the export LC book and that business, really understanding who the counterparties are, visiting the counterparties, doing proper onboarding. In my view, there's sort of technology that can come into play here, but it's very much a personal touch as well. It is very much a look, a feel, a do I trust the person sat opposite me, as well as a sort of look back as to the flows that are going into those organizations. So for example, if you think about the volumes you see on the export side or on the supply chain side, is the company where the payments are going to actually sizable enough to accept that level of volume and that level of payment, right? And we've seen an interesting couple of interesting things over the years. We've seen a very large healthcare business in the Middle East collapse partially, obviously it had a lot of debt on balance sheet, but partially driven by their supply chain finance solution and where those that money was going. And I think that's a big question in terms of when we think about the doc trade side, We've done a lot of work in terms of automating that aspect of things, but as we move over to open account, it is really important. And there is a level of reliance placed on our counterparties.
Sure. Yeah, that makes sense. And it's an area of the business that's only continues to grow, right? So there's going to be even more volumes flowing through that. So we have to be more sensitive. Nigel, anything you want to add there just on the open account side?
Yeah, I will say BAFT has a great video out there about this, and it does talk about, this was from 4 years ago, but open account was 80% of the market, right? 20% letters of credit. I think that's maybe changing a little bit. But my perspective is the data's out there. You know, when you have documentary credits, you have all the data, you can join the dots very closely together. But the bills of ladings and the packing lists are all out there just from different sources. And if you can have access to that and visibility, then you can kind of close the gap and affect the same change. Much like in cash-based AML as well, there are techniques there which I think have to be adapted for what we do in the trade world.
Makes sense. So I want to pick up just on something, Mansour, that you referenced, which was just when you're reviewing the business and you're saying, well, I need to understand the other side of this transaction. Do I really trust that they can support whatever this transaction is? And some of the time, there's a reality that the people that are doing that analysis are individuals. Mm-hmm. It's not just the systems that are going to solve for that. Some of it comes down to your experience, your knowledge, your ability to take that gut check of, well, this just looks a little bit fishy, a little bit off, and I'm going to dig in just a touch further. But on the flip side, we've just seen, this slow departure, this exodus of knowledgeable trade finance experts in the market because they're retiring and the new generation coming in typically may not be as involved in trade finance or may just not have the longevity, right? Who may not be saying, I want to do trade for 25 years. They say, I want to do it for a couple of years, then hop to the next job, right? Do we have a talent gap that is impacting not just how we process, but also how we handle red flags?
That's interesting. I think, and we touched upon it in the last session, training is hugely important in the development of individuals in terms of understanding the market and the products they're dealing with is hugely important. When I think about sort of the different hats that each of us wear day to day, I've got to wear a risk hat front and center, and all my sales team, all my structuring teams, all my implementation teams need to wear that risk hat alongside their day job. Fundamentally, it's them who, as they're executing a transaction, be it originating or supporting the ongoing management of a transaction, will see nuances and changes that differ to what we could and historically sort of expect on a deal. When I sort of think more from an operational standpoint, I think this is where we're seeing a lot more automation take place from an operational back office standpoint. And I think that's where I have the biggest concern, that we're losing experience in that side of the business, because actually the identification of red flags, be it sort of bills of lading or changes in sort of bills of lading that are not, or even actually sort of things around quantities versus the size of the ship, right? Yep. You can automate a lot of that in terms of the process of reviewing it, but actually you do need somebody sat outside who's got the experience to then say, well, actually, this is wrong, this is right, I think this is an error versus this is actually an issue.
We talk about, at least I talk a lot about the solutions, the partners that are on the stage, how you can come in and kind of institutionalize a lot of that knowledge, right? Which is great, except you still have to have someone who does have to have that expertise. Otherwise, then you're left with kind of nothing, and there's this yawning gap when you do need a little bit more of in-depth review. And
I mean, just on that point, I mean, as we move and automate, on the other side, they're moving and automating and adjusting their processes the same. So you always need that sort of experience to have a look at what's being processed and actually say whether it's right or wrong and if there's any concerns with it.
You're trying to stay one step ahead of the bad guys, and the reality is, unfortunately, for everyone in the room, banks are much slower to adopt change than the bad actors. They are moving quickly. We heard all about agentic AI earlier today. You can just only imagine the capabilities that people that want to be doing illicit transactions, like what they have access to today. It's mind-blowing. Going back to a point, Mariya, that you raised, which was on the kind of understanding from a network perspective, right? You need to know not just your customers, but your customers' customers, and if you can go even further down the line, fantastic, right? What are we doing, or what do we have access to now in terms of the external platforms, data sources, those sorts of things that we can use to augment our knowledge, capabilities, understanding, and ultimately our ability to identify and explicitly act against real red flags?
So I'll answer that question by saying we have 3 technology companies represented on stage here today. And and we work with banks, and the way, for example, Mansour, you talked about how when we work with banks, banks have a ton of data you are sitting on. You have all the historic data about all the trade transactions you've done. That's invaluable. That's amazing. Now, think about what you can do if you combine that data with all the external data sources out there, other data providers, other systems out there. And what I'm trying to say is, if we combine those two, so if we can expand that to a better understanding of data, generate better insights, combat trade-based money laundering in a much better fashion by combining your transaction data, historic data, and all the external data sources, maybe at some point of time, doing it live versus doing a transaction look back. So that's a possibility out there. So these data systems exist. So you get the information about the market trends, the competitive analysis, all the geopolitical changes happening, all the sanctions that are happening. So if you combine all of those, and it's just a matter of time when we can get everything together, combined with all the historic transactions, and maybe do red flag checks live on every single transaction.
Well, and you know, with the advance of AI, right, you can actually churn through all of those data sources without it needing to be a person that has to go through everything one by one, right? That's going to give you a lot more access to positive responses in a more meaningful way. So let me ask the maybe a little bit of a controversial question, which is, and Nigel, I'll start with you on this. Are we moving fast enough in kind of reacting and embracing new technologies in this space? Right? We've talked about how the bad actors they're moving quick, right? Are we seeing the banks move fast? And this will be the view from the technology side, which may be a little different than the view from the bank side. So we'll start on the tech side, and then Mansour, you can defend yourself.
Yeah.
Yeah, that's a bit of a loaded question, isn't it? Don't want to offend any customers or anything, but no, I understand that banks are under a lot of regulatory surveillance, right, to make sure things are done right, and that ultimately you go to a bank for money and trust, right? And so they want to make sure that everything they do is trustworthy and everything they can handle from their clients. But in that realm, they are encumbered by having to do a lot more research and be a lot more comfortable, especially with the new generative AI, the new models out there, which are absolutely incredible. They're every day getting better. But to Mariya's point, you know, the organized crime, the TNOCs don't have those restrictions, right? And they probably have bigger budgets, frankly. So definitely are we moving fast enough in the banking world? No.
Fair enough. Mariya, you want to pick up from there?
I'll be a little bit more politically correct and say, because of customers in this room, and say it depends. And I say that because some of the geographies are moving fast, and some of the geographies, like you said, Nigel, I agree with you, take their time trying to figure out, you know, should we move, how should we move? And it varies from bank to bank too. And I say that because Mansour, since you're here and you're talking about Lloyds, Lloyds is a bank that, since we've started working with you, has been moving at an amazing pace. It's unbelievable how fast Lloyds moves. We've seen it, and it's and you know, even if you're talking about e-docs or you've adopted everything new happening in the industry, and it's always in the forefront of trying out things. So I feel like it depends on the bank and the appetite for the bank to do this. And again, the size of the bank also matters. Right? Some of the global banks cannot move at that certain pace for the reasons that you said. So it's a balance.
It's fair. Mansour?
Yeah, I suppose
you get the wrap up
I
on
get
this one.
I suppose the easy one, right? So from my perspective, Lloyds has sought to move quickly. We have sought to adopt new technologies working very heavily, for example, with Microsoft around Copilot and integration of Copilot into our business. From my perspective, as we build out a trade business, actually we're in a very fortunate position whereby we can invest heavily in it rather than have extensive systems that are incumbent to the extent that other banks have. And I think that makes us more nimble in some respects.
That's good. And what I will say, just, and this will be a shameless plug for a second, we do with BAFT a trade technology survey every year. It's currently active. If you want to fill it in, please feel free to go to the BAFT website. You can find a link to it. One of the results from last year that I saw, which was very, not surprising, but comforting, I guess, to an extent, was that something like 60 to 70% of respondents were identifying that their next, one of the kind of top technologies they were investing in the near term was intelligent process automation, right? So they were actively already working or seeking to work on projects associated with this, right? Blending in some of the red flags and automated checks that are necessary, frankly, for the day-to-day business. Otherwise, that you kind of can't keep up with things transactionally. I'm gonna skip over our last question only because we've got about 6 minutes left. We've got quite a few questions that have popped up from the audience, so I'd like to dig into those. And the first one was, did adoption of EBLs and Moderator increase red flags and false positives being identified, or was there a significant improvement? So this is an interesting one. If we go from the analog world where there's physical documents and now we're in the digital world, and I'd love to say we're seeing massive amounts of EBLs and Moderator compliant transactions happening digitally. I don't think that rate is yet as high as we want it to. But does that create any risk? Does it make things better? Any view from the participants?
I think it will make it better. Now, I say that because I don't think we have enough data to answer that question yet. The reason why I say I think it will make it better is everything is digitized, and you don't have to worry about digitizing paper documents and trying to extract the data from those. When you get the data in a very structured format, checking for red flags against that, we are eliminating one problem when we get there. So for that one reason, the data coming in is much more, it's better. We should get better results.
One of my biggest concerns is with respect to, there are a number of banks that continue to operate on copy docs quite heavily. And I think e-bills or e-bills relating will sort of move away from that. And I think that will be beneficial because it removes the risk of that in the industry.
The only thing I could see potentially being a challenge, right, is that my natural progression for this is to say, okay, if we've got digital documentation, digital information, how can I straight through process this, right? How can I become more efficient? Because the push and pull with us as financial institutions is always, how do you increase efficiency? How do you cut down on the amount of effort, particularly in the traditional trades world, right? So there is a little bit of risk that gets injected where you say, if your processes to catch this stuff aren't really good, maybe you introduce some straight through processing that creates risk. That's the only potential I could see. But I'd love to be in the world where we're doing everything digitally in traditional trade, and that's the reality of it, but I think we still have a little bit of a ways to go. The next question was focused on SAR responses, and so the question was, do you think that in lieu of a response from a SAR, regulators are relying on the financial institution to do the research and possibly terminate the relationship in question? Mansour, I guess this would be kind of directed towards you more than anything.
Yeah, I mean, it is our responsibility to do the research and raise the SAR fundamentally, right? So it is our responsibility, and even once we raise the SAR, it's our decision as to what we do with that client and that transaction. So yes, it is our decision as to, irrespective of getting an outcome to the SAR, it's very much a, do I want to continue working with this counterparty or not?
Makes sense. The next one was related to, and we've covered this a bit, but maybe there's other detail that folks want to add. Just artificial intelligence generally. How are we leveraging it to identify red flags? And I would say, is there a view from the group that maybe it's, because we had this question in, but we kind of pulled it, that says not just identifying red flags, but also focusing in on the the true red flags, right? Is there a place for artificial intelligence that weeds out the false positives in our world? Is there a view on that from the group? And I'll Mariya, it looks like you want to say something, but you want to say it very carefully.
I know, I do want to say something carefully, so I was thinking about it. So let me answer that question in two parts. The AI will help us comb through tons of data. If you look at the way document trade is done today, you can have anything written in our 45, 46, 47 of an LC, and trying to really understand what a human wrote there. That's where natural language processing comes in, and understand all the variances of all the types of trade documents coming in. Machine learning is crucial to do that. So that's all there. Now, with the advent of Gen AI and what we are trying to do, I have to tie in the guarantees angle here. When you're looking at contract documents, that's where AI can help more. And now I'm trying to tie that to red flag checks. We still need to do the red flag checks on all of these trade documents. So if you can get the data extracted properly, I'm then getting that data to check for red flags is much more efficient than trying to do it the other way, rather than a person trying to do it. I'm trying to get to the second part of your question. Will it reduce the false positives that are getting? Eventually. And I say that because AI is all about training, and if you can train enough, you will reduce the false positives, but it's not going to happen on day one.
Fair.
That's reality.
Fair. Nigel or Mansour, any view?
Yeah, I think I agree with Mariya on that as well. One of the areas where AI will be very, very useful, probably beyond a human, is looking at fake documents, fake transactions. Because there's a premise that maybe AI can detect them better than a human, if AI has created them. And some of these documents are so compelling now that are being generated nefariously. It's very hard to take. But if you roll the carpet out a little bit further, beyond just that, I think when you look at the ability to use signals from IoT to determine if goods have landed or containers been opened, the more you can use that, going back to the first question, I think there's more authenticity than relying on documents that have been signed and possibly been forged. Signals are easier to track. And then when you add that into the equation with smart contracts and what was talked about earlier with DLT and blockchain, you start to get a much more cohesive system, which is harder to penetrate from the bad guys.
It's interesting. I'll be very curious to see where things take us a year from now, because it does feel like in the space we are moving quite rapidly. I'm going to take just a moment. If you've enjoyed this panel and you're really interested in red flags, one of the things I would encourage you to do is reach out to Craig Weeks. BAFT is in the process of updating their list of red flags. There's documentation available around this. If the folks are interested in participating in the working group and the committee that's going to be focused on this, please reach out and involve yourself. It's always helpful to have more members of the community. To the panelists, thank you so much. This has been a great and educational session, and hope you enjoy the rest of the day, everyone.
Thank you, Patrick.